Yo, what up guys, what up guys, it's your boy Fanilakhe Mamba. We in the building, bro, you feel what I'm saying, man? We in the building, man. Don't mess with me, man, don't mess with me. Click the subscribe button, click the share button, and click the like button, and also drop a comment as to what do you think about this video, because man, we are about to drop some killer content here, guys. Look at my uniform, guys. Do I look beautiful? I look handsome, guys. Check out Forex Chasers. Don't make a mistake, guys. Go check our Forex Chasers merchandise as well. Store is there. If you wanna have our merchandise, just go and check it out, guys. It's also there, it's running. So today, guys, I'm gonna be dropping tips if you are still a beginner and you wanna work your way up to the top. Obviously, I'm gonna try and make it some sort of a series so that we continually send these tips so that you know that okay, these are the tips that I need to follow for me to reach my level of consistency. So as I believe that if you are still new, if you are studying, this is gonna be one of the best tips that you need for you to grow as a trader. So don't turn a blind eye on this one. Don't take this information slightly because of you feel like it's YouTube, it's for free. Just pay attention and follow these things. Even I myself, I'm a consistent trader. I've been a consistent trader for the longest time, but I still follow this set of rules. I still follow these tips because of are the ones that are keeping me consistent in a long-term perspective. Like, because today I can go out of my trading plan, I can go out of my trading system, I can win, but then long-term will I win? No, I won't win because of I don't have a set of rules that I follow each and every day. So these tips, guys, they're gonna help you to increase your skill. They're gonna help you to be a better self. You don't have to compare yourself to anyone, but you yourself be a better version of yourself in terms of looking at those charts. So the first tip, guys, I have my phone here, guys. I'm looking at them at my phone because last time I was recording a video, I had to go and grab them there, so it was a little bit awkward. So now I just wrote them on my note. So the first tip I'm gonna be giving you guys 6 tips. The first tip that I'm gonna be giving you guys is pick FS pairs to trade. So why am I saying this? Because like there are traders who are trading all 28 pairs that are there in the market, in the forex market. But now each and every currency pair that is there, whether AUD, JPY, whether GJ, whether GU, whatever pair that is there, it has its own different characteristics, its own movement that it moves. So if you are trading each and every pair that is there, you wouldn't be able to really understand it to its full potential. You're just gonna know maybe 10, 15, 20% of that pair or how it moves. But now you need to focus on only 1, 2, 3 pairs, then that one can know, or if GJ does this, then most likely it's gonna do this. If gold does this, most likely it's gonna do this. That's why we're calling it laser focusing. You are focusing on one thing, but you cannot just start with 1 pair. Start maybe with 10 pairs. Just analyze them, keep on doing the same thing, keep on analyzing them, keep on each and every day analyzing them, and then you're gonna filter out those pairs that don't work out for you, and then you work with those pairs that work best with you. You can end up with 4 pairs, you can end up with 5 pairs, whatever pairs that the amount of pairs that works for you, then it's still fine. There's no limit to say trade 1 or 2 pairs. No, I'm trading 3 pairs. So you can do 4, you can do 5, you can do 2, you can do even 1. There are people I know that are trading 1 pair only. And another tip that I'm gonna be giving you guys is that learn your technical analysis. That's one of the most important thing, guys, in the trading industry. Learn how to do top-down analysis, starting from weekly time frame. If you want, you can still go to monthly time frame, but I myself, I'm a day trader, so I don't go to monthly time frame. I go to weekly time frame, then I go down. But if you are a swing trader, you have to check on your quarterly time frame, you have to check on your monthly time frame, and so on, going down to find your entries, probably maybe on H1 or H4, depending on which one you prefer at that time. But learn how to do top-down analysis. Learn how to analyze, seeing the market structure from bigger time frame to lower time frame, because of the market structure that you see on bigger time frame is the one that's going to be sustaining you for the long term, because of maybe you are swing trading, you are position trading, and so on. So you have to understand whenever you go down to smaller time frame, you look for the structure to develop. If maybe on bigger time frame it was a bullish momentum, then on smaller time frame you're seeing that maybe H1 is bearish, you wait for H1 to turn and be bullish, and then you look for buying opportunities, because you don't want to be trading against the trend, you want to be trading with the trend. The trend must be your friend at all times. So that was tip number 2. So now we move on to tip number 3. So tip number 3, guys, make sure that each and every position that you are opening, you have the target and you have the risk. So make sure that you are always putting your stop loss and you take profit. That is one of the most important things, to avoid blowing accounts, because we have many people coming, hey Mamba, I just blow my account, man, I don't know what to do, and so on and so on. To avoid those kind of things, guys, don't be those kind of traders like, I'm a full margin trader and whatsoever. No, those people, they have enough capital to refund if they blow that account, and they won't show you if they blow that account. So the best thing to do for yourself is stay true to yourself, apply proper risk management. I think that's the tip number 4. But just make sure like that you move your stop loss, like you manage your trade into accordance in the way that it should be managed. Don't just enter a position and be like, I'm gonna see if it goes in my direction, then I'm gonna close. Maybe if it goes against me, I'm gonna hope it goes in my direction so that I don't close a lot. Make sure that you have your stop loss, make sure that you have your target. What I would advise people to do, guys, is that always when opening a position, do 1:3. 1:3 win ratio is the best. Even if you lose 3 positions out of 4 and you win 1 position, you still at the break even. You didn't lose. So you see that even if your strategy is not that effective, but you still have a chance. If you lose 2, you win 2. You are above there, you are above. So you see that you are up like 4%. So that's basically amazing. So guys, make sure that you use 1:3 or anything above, but nothing less than that. Make sure that you apply that into your trading system as well. And then tip number 4, apply proper risk management, guys. This is very important, guys. Each and every time when you're opening a position, don't do those things of like, you want to do barcodes, you want to open 10 lot size, you want to do what? That thing is crazy, bro. Just open 1 position, risk 1 or 2% of your account. If you know that you are having $1,000 account, make sure that you are risking $10 of that account, or you can scale to maybe $20 of that account. That is what makes traders to be consistent and successful in the market, because of the applying proper risk management. Yes, you're not going to be successful overnight, but it's going to take longer. But you know that long term you're going to be making a living, because of you're not going to be trading $1,000 account forever. You're going to be trading $10,000 account. You're going to be trading $50,000 account. You're going to be trading $100,000 account. So you see that if you're trading $100,000 account, a 1,000 is what is your $1,000 is your stop loss. Like 1% of 100,000 is $1,000. So you see that now you're gaining more with proper risk management that is in place. So don't rush the process. DJs will always say, don't jaha the process, guys. Don't want to be like billionaires overnight. It doesn't work like that. It will never work like that. There's no way, guys, that you can be an overnight billionaire, unless maybe if your granny is applying some witchcraft. I'm kidding, guys, I'm kidding them. But tip number 5, always make sure that you journal the trade. I feel like myself, when I started trading, I was lacking on this type of category of journaling my trade. I felt like it was extra work for me. I felt like, no, I just wanted to analyze and then I wanted to take a position. But journaling my trade and doing advanced self-review, it helps me to understand the person I am. It helps me to see what are those setups that works for me and what are those setups that doesn't work for me, especially when we are still in the journey of picking up those currency pairs. You need to journal those trades and see, okay, I took this position on GJ, they tend to move out nicely. So GJ can be on my top pairs, can be like my daily pair that I always trade each and every day, because it tends to pay me more than it makes me lose. So you see that journaling is gonna make even your journey even more easy to see, okay, I win more on GJ, I lose more on Euro USD, maybe I lose more on gold, maybe I win more on USDT. All those kind of things, guys, they help you because of, you know, through journaling, or okay, I'm winning this win rate I have, I'm winning 1:3, always I'm hitting my TPs, and then when I'm losing 1%. All those kind of things, guys, they come through through journaling your trade. You get to see all that results through journaling your trade. And the last tip, guys, that I have for you is psychology, guys. This is for like, I don't know how can I say this, but psychology, guys, one of the most important one, guys, because like you will never find consistency. Whether you have a 90% win rate strategy, you don't apply you apply proper risk management, but if you don't know where to enter a position, where to exit your position, trading management, if you suffer with that, guys, you will never find consistency. So this is one of the best. You're gonna be holding trade, you shouldn't be holding. You're gonna be closing trade, you shouldn't be closing. Taking big loss, having small wins, and all that psychology in there. Entering in wrong places where you shouldn't be entered because of you wanna see yourself in a position, doing revenge trading, chasing your tail. All those things, guys, they're gonna mess with you a lot. So make sure, guys, that you do a self-review on psychology as well. Just the experience, just go through the chart, analyze, get the experience, because there's no other way you can drop psychology. It's only through experience, guys. So make sure that you follow these tips for you to be a consistent trader. I'm coming with another tips as well on the next video that we're going to be talking about. Let there be peace in the Middle East. Let our brothers and sisters be safe. It's me, your boy Fanilakhe Mamba. I'm out of the building.